welcome to Saxo Bank's Market Call, broadcast live from Copenhagen, Denmark. Today is Tuesday, 19th of February. We had practically no market-moving economic releases yesterday. The only single item that was released during the European session was the Swiss adjusted retail sales for the month of December. Disappointing, coming out at a 1.2%, where the expectations were actually at 5.2%, and the prior figure at 2.9%. Overnight, we had Australian preliminary imports for the month of January, coming out at 6.0%. This contrasting against a minus 0.3% of a prior figure. Also a couple of Japanese figures, nationwide department sales as well as Tokyo department sales, both for the month of January, and both coming in line with the expected figures. However, what was interesting was the minutes of the Australian Reserve Bank's previous rate decision, where the indications were that the debate had centered around whether the bank would hike 25 or even up to 50 basis points. So this was obviously a very bullish news for the Australian dollar. But aside from this, really no economic releases of any market-moving nature, as the U.S. markets were closed due to the President's Day holiday. On the FX market, as mentioned, the Aussie dollar is enjoying a rally on the back of the minutes from the meeting and printing a new 2008 highs at 0.92 and 08. On the equity markets, obviously the American markets were closed, but the European as well as Asian stocks staged a moderate rally, and the rally was primarily fueled by the metals and mining companies, whereas the financials were on the losing end of it. On the fixed income markets, both 10-year treasuries as well as bonds are trading lower. Treasuries are obviously hurting from the inflation fears in the U.S., and JGBs are also on the offer on rising Japanese equities. On the commodity markets, the gold as well as the silver prices were pretty well supported. However, the gold tested a trend line support at $901.42. This for the April contract, but has since bounced higher on the weaker dollar and on inflation concerns. With the crude prices, they have been rising now for 4 consecutive days, and the April contract is testing support at $96.57 a barrel. The calendar items today, we'll see a couple of interesting figures. We have early in the morning at 8:30 GMT Swedish CPI figures for the month of January. This is followed by the Eurozone construction output for the month of December. This is at 10 a.m. GMT. At noon, at 12 o'clock exactly, we have the Canadian consumer price indices as well as the CPI core figures being released, and this is followed by another Canadian figure 1.5 hours later. We will see the wholesale sales figures for the month of December coming out, and this is a month-over-month figure. Later in the Asian session, or rather the American session, we have the US NAHB Housing Market Index. This is a February figure, and the release will be at 6 p.m. GMT, with a consensus figure now at 19. Finally, in the Asian session, tomorrow we will have the Australian Westpac Leading Index figure for the month of December. So after coming highlights in the economic calendar, tomorrow we have the UK BOE minutes, where we will see the Bank of England's rate, the discussions leading up to the Bank of England's rate decision to cut 25 basis points. We also have the UK public finances and money supply figures being released tomorrow. All of this will be followed by a chain of US figures later in the American session, namely the MBA mortgage applications, all important CPI figures, housing starts, building permits, and finally the minutes from the FOMC meeting that had taken place on January 29th through January 30th. Thursday on 21st we have the Swiss trade balance as well as the Eurozone current account figures coming out, so they'll give some direction for euro pairs, as well as UK retail sales and US Philadelphia Fed leading indicators. This is for Thursday this week. So what is happening in the marketplace? Well, as we mentioned, the Reserve Bank of Australia's last policy meeting minutes were revealed, made public, and they sort of brought the fact that the debate had centered on whether the bank would hike, not whether it would hike or not, but whether it would hike 25 or 50 basis points. In the end, Reserve Bank of Australia did opt for a 25 basis point hike, but this discussion has now basically led to markets speculating that another rate hike is on the cards, and this is already expected to be delivered in the bank's rate decision next month. And the expectations are that the Australian key interest rates would be going all the way to 7.25%, another 11-year high as it is. On the fixed income markets, as we mentioned, the treasuries are falling, and they're falling ahead of the government report tomorrow that will show the consumer price index for the month of January. The expectations in terms of the yearly or the annual figures are 4.2%, and if this actually did materialize or came about the expected figure, this would show an elevation of consumer prices in the U.S., which registered a 4.1% year over year in the month of December. Finally, and perhaps most interestingly and most importantly, we have the news of the New York insurance regulator, Eric DiNallo, proposing a plan whereby the bond insurance would be split up, and the split would, according to this plan, take place along the lines of two sorts of bonds that these companies are insuring, namely the municipal insurance units and the less profitable subprime mortgage-linked debt. If this plan actually did go through, and if the insurance companies agree to such splits, this would obviously lead to ratings on the less profitable subprime length mortgages being cut. So the rating cuts that would ensue would also mean potential total write-downs in the amount of $35 billion for the banks that hold these mortgage as well as asset-backed securities. So that is indeed a big story in the making, and we are keenly following it here at Saxo Bank. Our recommended FX strategy of the day is in the very popular cross of euro-dollar. We like the uptrend. We are seeing it in the pair on the short run, and we are looking to buy into euro-dollar in dips towards the 146.95 level. This level actually represents a 50% Fibonacci level on the scale of 149.51 to 144.38. Buying on dips, as mentioned again, towards 146.95 with a target at 148, and we would recommend that you keep a 30 to 35 pip stop loss on your buy orders. Finally, our recommended equity strategy of the day is in the Australian mining company BHP Billiton. This is trading on London Stock Exchange. Our entry range for the trade is 1590 to 1620. With a target at 1700, and we are keeping a stop loss at 1550. Now, as mentioned, the mining companies have been bid into overnight in the Asian session on the news that the higher prices, or that the manufacturers or the miners would demand higher prices for the iron supplied in Asia. So both BHP Billiton as well as Rio Tinto have seen their equity prices go higher, but at this point we would prefer BHP Billiton of these two and buy into it at the stated levels. That is it for me today. Thank you very much for joining us, and tune in again tomorrow. Bye-bye.